Hi everybody, this is Tom Willard with the video lesson of the day. Those of you that follow the YouTube channel and some of my videos know that the last video I did focused on one of the top trading patterns that I use for intraday trading or day trading in the morning, where you're in and out in the same day and you're utilizing gaps and gap concepts to really take advantage of great profit making opportunities within the day. Most of you out there are swing traders or investors, people that want to buy and hold overnight. You have other jobs, occupations that you like to do. So I wanted to do this video on a swing trading pattern that's one of the top ones that I use, and really teach you in about 3 to 4 minutes here how to see it and identify it. Now, in a nutshell, this is a daily chart. Okay, and in this daily chart is what your bread and butter from a swing trading perspective. And defining swing trading is simply buying and holding an issue overnight, typically for a week up to multiple weeks on end, depending on the pattern you're seeing, and of course your targets and how you manage your trades as they become profitable. In this particular case, we've got a daily chart, so each candlestick here represents one day of trading. Okay, and so you'll see here that this particular issue based for 9 days. You'll see 1, 2, 3, 4, 5, 6, 7, 8, 9 days. And when it broke out here, this was a buying opportunity. Okay, I'm not showing any of the previous information in the chart so that you could hone in on this action here, because I wanted to teach you the specifics. But this was a great buying opportunity, and you could have bought this here. Now, this move it made went from this location where you got in to this location where it topped out and started to retrace. Okay, so that is the overall move of this particular, this recent move, which was what, 3, 6, 7, 8, 9 days as well. Okay, now when it starts to retrace is when you got to start watching this. If you see this as a stock or an issue that you like, that you, for whatever reason, it's uptrending and it's something that you want to look to buy and you want to get in on, watch these retracements. You don't want to be buying when they're up multiple days. You want to be buying when they're pulling back, because as most people know, issues, stocks, commodities, they don't go up or down in a straight line. There are always pullbacks or retracements, whatever you want to call them, against the overall trend. This particular issue was trending up, so this retracement presented an opportunity to buy this thing if you were wanting to buy it. And if you didn't get it here, or if you got it here and you wanted to add your position. So let's go over it. Here's the overall move. As it started to pull back, you want to typically focus on when the issue is pulled back between 40 to 50 to 60% of the move. Okay, as it starts to move halfway back towards the original breakout point, okay, is when that is kind of like the make or break time for the bulls and the bears. Okay, and especially the bulls. In this particular case, it pulled back here off this bearish topping tail, gave you a couple of red bars and then a green bar, which indicated, okay, this thing's starting to pick up strength. People are starting to buy this, saying it's cheap based on the pullback here. And you'll see that the retracement, if you eyeball it, between the high and the low and the overall first move is about 40%, which is exactly right in that same range I told you. Look between 40 to 50 to 60%. Okay, obviously 35 to 65. It doesn't have to be exact. A lot of people try to get too exact. But retracements of about 50%, if you want to throw that dart right in the middle, is what you need to be focused on. Here's your beautiful buy point, right? After this little green bar, you buy it right above this high, you put a stop here, your first target is this previous high, and you can see that it really rocketed through it and pushed higher. Now, typically the way I buy and sell, a lot of times I'm on the selling side, is in pieces. So I would sell part of my position here and then look to trail stop or ride this thing higher based on what you're seeing for this particular issue's chart on this daily chart that's over here to the left that's not being shown. So if there are resistance points up here, that's your secondary, and you have tertiary targets up there. Okay, but that in a nutshell is how you, as an investor or a swing trader, get on these issues that are running. Don't chase them here. Don't be buying them here, okay, and suffering through this pain. Let them pull back, give you an ample opportunity to use the Fibonacci retracement concepts, okay, of about 50% as a guideline to say, okay, this thing's pulled back about 50%. Are there signs with the candlesticks and with the behavior of the stock in that day that's giving me the idea that, hey, this is now a time to buy? And of course, there are many other factors, such as the market environment, which we are turning, it seems like, a little bit more bearish now. Speaking to you in early June here, 2011. So that always plays a hand, and also you have to look at multiple time frames. But I wanted to show you just daily charts so you could see up close and personal the pattern and what you're looking for. Hope you found this video useful. If you have any questions, as always, email me, tom@tomwillardtrading.com. Have a great week.